Your treasury team makes payments, checks bank balances, and keeps cash moving every day. But is the team only keeping the lights on, or is it helping guide the future of the business? Welcome to Star Treasury Insights, snack sized the industry perspective. I am Sudeep Sharma, a certified treasury professional or a CTP, and a founder of Kuber Treasury Solutions LLC. Today, we are answering this question: how do you know whether your treasury department is operating at a basic or advanced level? Let's break it down using the STAR or STAR method: situation, task, action, and result. First, the situation. Imagine a finance leader reviewing the company's treasury function. The team manages daily cash, processes payments, works with banks, and makes sure important bills are paid on time. Those duties are necessary. But the finance leader wants to know whether Treasury is also helping the company make better decisions about cash, borrowing, risk, and growth. In other words, is Treasury mainly reacting to day to day problems or helping the business prepare for tomorrow? Now, next comes the task. The company needs a honest way to measure treasury maturity. Treasury maturity simply means how developed and capable the treasury function is. A basic treasury team may spend most of its time completing transactions and fixing daily problems. A more advanced team uses connected systems, automation, timely data, and financial insight to guide business decisions. Understanding the starting point helps the company build a realistic improvement plan. Now, the action. Here is a simple 5 level framework. Level 1 is operational efficiency. The team focuses on payments, bank reconciliations, and daily cash activity. Many tasks are manual, spreadsheets are common, and the team is mostly reacting to problems. Level 2 is digital integration. The company begins using a treasury management system, often called a TMS. Bank, accounting, and cash information start flowing between systems with less manual work. Level 3 is process automation. Routine activities such as payment processing, reconciliation, and cash position updates are largely automated. The team spends more time reviewing exceptions instead of handling every transaction by hand. Level 4 is predictive analytics and real time visibility. Treasury can see cash, liquidity, and financial exposures more quickly. The team uses data to forecast future cash needs and identify possible risks earlier. Level 5 is strategic value creation. In this case, Treasury becomes a trusted advisor to business leaders. The team helps shape working capital plans, funding decisions, financial risk strategies, and major business choices. Now, finally, the result. Once the company identifies its current level, it can decide what to improve next. A level 1 team may begin by standardizing processes and reducing spreadsheet work. A level 2 team may focus on connecting systems. A level 3 team may improve forecasting and real time reporting. And a level 4 team may work toward becoming a stronger strategic partner. Many organizations are still moving through these stages. So, being at level 1 or level 2 is not unusual. What matters, in my opinion, is knowing where you are and taking the next useful step. Now, here is the industry perspective. Treasury maturity is not measured only by the technology a company owns or uses. A company may have an expensive system and still rely on manual work, weak data, and delayed decisions. The real question is, how well does Treasury use its people, processes, data, and technology to support the business? Here, the main lesson is simple: measure your starting point before planning your destination. Even moving one level forward can reduce manual work, improve cash visibility, and help Treasury provide greater value. This is Sudeep Sharma with Star Treasury Insights, snack sized the industry perspective. One Treasury topic explained in plain English, less than 10 minutes. Don't just improve, evolve.